Hey everyone, welcome back to Fiscal Voyage. My name is Felix, and today's video we're going to talk about an undervalued dividend growth stock with tremendous potential for return, as well as a nice dividend yield, starting yield that you could potentially have going forward. Today's video is going to be about AMGN, ticker symbol AMGN, and we're going to get right into the fundamentals as well as the technicals and look at all that aspect to give us a nice beautiful picture of this stock. But before we get started, if you're new to the channel, make sure to hit that subscribe button and like this video if you enjoy it. But make sure to hit that subscribe button for more videos like this. So let's get started. AMGN Inc., ticker symbol AMGN. This stock is going for $213.92 here. Had a decent up day on Friday. But this is some of the things that I like about this company and why it's a undervalued dividend stock. First off, 52-week range is on the lower end of the 52-week range. It's only $3 from the $210.28. Earnings expected to be $16.40 forward looking, with giving it a PE of 13. It has a dividend of $7.04. So based on the earnings and the dividends, it looks more than half coverage, and it has a current yield of 3.29 or 3.3. So here's the big reason why I like this company. If we go to the fast graph, you can see here AMGN has a tremendous 20-year period growth in earnings. And as you can see, price follows earnings. Here you had high valuation from 2000 all the way to 2008, 2009. Is when you started to see lower valuation. But from 2000 to 2006, 7, you had basically no flat earnings or flat return. You can see here at $72 all the way over here, it went down to possibly $53. So you were losing if you bought here at high valuation with a P of 60 to 50. This is why valuation is so important in the market. You want to buy companies that continue to grow earnings. And during that time period, AMGN grew earnings. You can see here they grew at 12%, 18%, 37%, 20%. That's tremendous growth, but the valuation wasn't there. And then coming out of the Great Recession in 2008, 2009, the company continued to grow earnings, much slower pace at 8%, 6%. But most recently, since 2012, you can see here a 22% growth, 15, 19%, and then last year they had a 12% growth during the whole pandemic and COVID and stuff like that. So that had tremendous growth in like the worst possible year for a lot of companies. So this is what I like about this company, that the earnings continue to grow year in and year out, and it looks, based on the fast graph, it's undervalued because the black line represents the monthly closing price, and right now at $213.92 from yesterday, it's under the orange line, which presents more or less a fair value estimate. And next year they're expected to have earnings slightly down, -1% versus 2020 to $16.44, but then in 2022 and 2023 they're expected 8% growth going forward. It has an S&P credit rating of A-, which is outstanding investment grade company. Long-term debt to cap is 69, which is pretty high for my taste, but not too bad because of the fact that it has a credit rating of A-. Again, high, solid dividend of 3.3% and earnings yield of 7.7. I like to see this at 6.5, 7% higher, so we get that. Other things that I like, if we go to the performance tab here, you can see the dividend growth, outstanding. In 2013, 30%. 2014, 30%, 30% for like 4 years straight. That's outstanding. Last year they grew it at 10.3%, really good, during that pandemic year. As you can see here, the payout ratio is only 38%. And we look at the free cash flow. This is what how the company was able to pay the dividends. Free cash flow. You need cash flow to sustain a company long term and to continue to pay out those dividends. And you can see here, free cash flow definitely covers the dividends throughout the years. They don't have an estimate for expected free cash flow, but I'm expecting kind of this level here. So the dividend is very well covered. And So earnings looks great. If we go to Morningstar, they give it a fair value around $200. So it's slightly overvalued based on the Morningstar estimate, but overall has a wide moat and is right in there in that fair value estimate. So, give or take $10, for a $200 stock. That's not bad. Other things that I like here, you can see here price to sell is lower than the 5-year average. PE, this is I think based on last year's PE. This is not forward looking, but it's still lower than the 5-year average. Price to cash flow is slightly higher, but price to book is also higher than the 5-year average. Again, this is from like last year, so with the price decline and the earnings, this is not forward looking. Other thing, since we look at the fundamentals of the company and we like it a lot, based on the fast graph, the free cash flow, the dividend history, the dividend growth, this company looks solid fundamentally. Let's also look at the technical. Let's look at the chart for AMGN. So over here, I have the monthly chart, and here the weekly chart, and these two are just the daily chart in a 1-year period versus a 30-day period. But overall, it's just the daily chart. And over here, so we're gonna look at the monthly and the weekly, because for long-term investing, that's kind of what you want to look at. I don't care about the day in and day out, what happened with the stock. If it's up today, down today, it doesn't matter. What I look for is the monthly and the weekly for long-term investing. So if we go to the weekly chart, you can see here the past few weeks, more like the past 2 months, AMGN has been on a decline, all the way from $250 to now $213. And if you go a little further back to the beginning of the year, it was around $260. So from $260 stock to $213 as of yesterday, Friday, 2 days ago. And some of the things that I really like about the technical aspect is that over here, you can see here, this was a top, this was a top here, this was a top here. So around the $205, $210 was once a resistance. So whenever the stock price hit that mark, seller stepped in and brought it down. Seller stepped in and brought it down and over here. But then eventually broke out and made a high of $244. And then it came back down during COVID. All the way down to the moving average, the 200 weekly moving average came down there. So right now, it went as low as $180, and right now at $113 is almost about $40 or so, close to the pandemic lows. And one thing I like about it is over here, you can see here at 210 it bounced over here. Then it started to create a level around $220, but at 210 it bounced here, and then it also kind of bounced here at 214. So this 210, 215 area looks like buyers step up, previously, and also because around to 210 there was support here. So once resistance is broken, that now becomes support. So I see technically that there's support in the 210. So I'm expecting kind of like a return back either from 213 to 235, and then possibly all the way back to 260 and as high as 276, which is the all-time high for this stock. Other things that I like is approaches the 200 weekly moving average as well as the monthly. This is the 50 monthly moving average here, and you can see here this stock, whenever it hit the 50 monthly moving average, it bounced it here in November of 2017, it bounced here in May of 2018, it bounced here in May 2019, and during March of last year it bounced there as well. So I'm kind of suspecting the same thing. So there you go. So the 50 monthly moving average looks like tremendous support area. So I'm kind of expecting the same thing for this stock to push this stock back higher. A stock continue to go higher as long as it returns back, as a ebb and flow, and it continue to go higher. So that's what I'm expecting here. So this is why I like this company at this current price, and expect it to move back to the $250 to $260 area. And I set up an alert at 195. If it gets to the 195, I'm backing up the truck in this stock because I'm gonna buy a lot more because I recently bought shares at this level of AMGN. So a decent opening position, but if it goes to $195 because the market goes lower overall, then I'm gonna buy a lot more at 195 and possibly 190. So let's see what happened. But I did open a position. I like it at this price. I'm expecting to move higher, but if it doesn't, I'm gonna load up a lot more around 195. But definitely right now is a good buying opportunity for this stock. But overall, as you can see here, tremendous company, A- credit rating, a nice dividend yield as you can get right now with a tremendous dividend growth. So this is like the perfect scenario where fundamentals looks good and the technical looks good. So we have a good risk to reward type of position here. So this is why I like AMGN as a undervalued dividend stock. All right, there you have it. Those are my thoughts on AMGN. Again, ticker symbol AMGN. I really like this company. I bought a few shares of that company, and I have my alert price for 195 to see if it gets that low. And if it doesn't, I have shares, and I'll write it up to the $250, $260 and see what happens there. But overall, solid company, solid dividend growth, solid dividend, great free cash flow, S&P credit rating, great. So it's investment grade. So overall, solid company. So let me know in the comments below what your thoughts on this company, or do you already own this company? And what other stocks are you looking at that are undervalued in today's overvalued market? So I'll see you guys in the next one. Again, if you're new to the channel, make sure you hit that subscribe button. And if you like the video, hit that like button. So I'll see you guys in the next one. Take care.